You see how messy the markets are? Let's take a look at this real quick. This is NASDAQ, this is US 30 or YM if you trade futures, and this is S&P 500 or also known as ES if you trade futures. Really not that much of a difference. But the markets all day today have been completely messy. If you're a day trader, you know that we make our money when the markets are either going up or when they're going down, not when we're dealing with this messy price action with volume but no direction. The reason this kind of volatility can really destroy your account is because you just keep getting faked out. Like you think NASDAQ is gonna push up, it ends up melting. And then it breaks support and you're like, okay, it just shifted structure, now I'm gonna take sells. And then it just fakes you out again. And you're like, well, maybe I was right originally and I should take buys again. And then it still does this. And when you take a step back, you look at this and you're like, we went nowhere and we just went sideways. But the amount of volume that you see, right? That's what I define as volatility. Volume without a direction. And you can see that. Look at the candle sizes, but we're not going anywhere, right? Volatility destroys traders' accounts. So in this video, I'm gonna explain some ways that can help you identify and anticipate messy markets before they actually happen. And because I was actually expecting this to happen, I managed to do 3 things that helped me end the day with over $2,500 in profit. And I'll show the profit, which is, I'll bring over Day Trading University's Discord. I posted my trades somewhere right here. 5 accounts connected, $500 each. It was $2,500 in profit. Wally, $1,600 and $500, so he made $2,100 in the same trades. So here's why I was expecting the markets to be mixed today. Think of the markets as buyers and sellers. When we're looking at these candles, right, this big candle pushing to the upside, just think of it as hundreds of millions of dollars, whatever number you want. It's a lot of buying happening, right? And when we see the drop, it's one of 2 things happening, right? Either the buyers are closing their positions and taking profit, we call that a profit-taking move, and that causes the drop. But a second thing is happening where those buyers, in order to get out of their position, sellers get in as well. So the market is literally just made up of buyers and sellers, right? There are investors, I'm calling it the markets, but these are investors, high frequency trading, computers, algorithms, I don't care what you want to call it. The point is, there are buyers and sellers. Investors are less likely to be actively buying or selling in the markets when we have major events that are planned. This is what causes this messy price action in the markets. No buyers, no sellers. This could happen because of important data like an inflation report or even something like the Federal Reserve's interest rate decision. But the event that caused this actually started 3 days ago when President Trump met with Russia's President Putin in Alaska on August 15th. This was Friday. And the topics of their discussions were proposals for ending the war between Russia and Ukraine. I don't need to go into specific details because honestly, that's a lot less relevant from a day trader's perspective. The important part is knowing that these 2 presidents met on Friday. What did they meet about and what was the result? But that was on Friday, so why does that matter today? I'm gonna show you something that maybe you haven't seen before. This is a calendar called Roll Call, and you can see Trump's, the president's schedule on here. So I like to check this every day before I start trading. And if we take a look at what we have going on today, around starting at 12:01 p.m., we have the president meeting with now Ukraine. So on Friday, he met with Russia, they're talking about peace talks, and now today, they're meeting with Ukraine. Russia and Ukraine have been at war since February 23rd, 2022. I remember the exact date, it was a Wednesday night because Wednesdays used to be date night for me, and Putin made the announcement of the invasion into Ukraine at like 9 o'clock at night. Gold took off. Like if I showed you what gold did on that day, it blasted to the upside. NASDAQ, US 30, at the time I was trading US 30, and it all dropped. So long story short, they've been at war for a long time now. The markets aren't even really reacting to it as much. But the fact that we have these 3 presidents meeting to end a 3 or 4 year long war, this is a big deal, at least to me, and I'm expecting it to be a big deal to the markets. So when I'm going to start trading, which is what I was doing this morning, I'm already prepared for the idea that we're going to get this. NASDAQ is we're gonna get volume, we're gonna have this choppiness, it's gonna look like it's gonna take off, and then eventually volume's gonna just kind of die down. Now volume hasn't died down too much yet because Trump and Zelensky are actually meeting as we're speaking. I actually just took this trade here when he was making some positive comments. I'm already out of the trade because I'm making this video for you guys to show you hopefully how to capitalize on this stuff. Now, obviously, I can't guarantee that the markets were gonna be choppy like this today, but I try to look at this from a logical perspective. And I don't think it's a coincidence that the markets are super choppy like this on the exact same day that we have all these world leaders meeting talking about ending the war between these two countries. To me, it makes sense that we're going to get choppy markets today. So how can we manage our trades or our risk when we're getting or expecting choppy markets like this? Because I still want to make money today. So I'm still on the charts. Also, I trade live every day with Day Trading University, so I'm here no matter what. But yes, I want to make money from the markets. What am I going to do to manage this nonsense? I have 3 things that I do. Number 1, I lower my position size. The reason I do that is if we play this out, realistically, you can see how messy and choppy a lot of this is, right? So everything you take here in terms of a trade is risky. So the reason I like to lower my position size really is because I set my stop loss based on market structure. I'm not setting it based on where I want to put it or how much I want to risk. If I have a lot of volume, right, say I'm entering buys here and I have my stop loss down here, I can't really decide where the stop loss is going to go because I like to do it based on market structure. So instead, when there's a lot of volume and indecision like this, I will, instead of taking 10 contracts or 15, I'll go down to 5 and I'll do something like that. So number 1, lower your risk when you're dealing with choppy markets. Now that does mean you're going to make less money because less movement in the markets is less profit, right? But you're also going to lose less because you're trading during a riskier day. I took 2 or 3 losses in drawdown in this before I finally I took like 2 or 3 trades that made up and then some, where I ended with $2,500. Earlier in the day, I was down, I don't know, $300, $200, and then I just had to keep getting it back up until I was like, you know what? I'm done. No more with this stuff. But lowering your risk, really good idea. And number 2, I always do this anyways, but especially on days like today, pay extra close attention to news feeds. I'll show you what my news feed looks like here by bringing over Day Trading Universities. If we go into the Discord, you can see the news feed. Literally, as I'm doing this right now, we have Trump on Ukraine and Russia talking. We have Trump speaking right here as I'm recording this, right? So if you're trading, if you're looking for trades and these people are talking, what if they said something negative and you're on buys on NAS? Most likely it's going to drop because when there's market fear, it will drop. So you have to be really careful. This is why number 2 for me is pay very, very close attention to a news feed. And the third thing that I like to do on risky days is I like to only enter when there's high volume. When I take a trade, I want to be in the trade when there's volume so that way I can get away from my entry and I'm going break even quick. I really want to protect my capital because take a look at what NASDAQ was doing today. There isn't a direction. If you compare NASDAQ to any other day where we don't have that, there's plenty of opportunities. Look at this to get, I actually took these buys last week. Plenty of opportunities to take entries when we're not dealing with stuff like this. Compare this price action, even though I still ended in profit and I'm happy with that, but we have to be careful. I'll actually show you the trades that I took inside Discord. I posted it in the analysis channel in Discord so we can see. I'll scroll up till we find it. So this is what I was watching, NAS hitting support. This is just me updating them. When we're not trading live, I'm telling everybody what I'm doing. Here's the first entry here. You can see I entered on an open candle. If I pull this over, what time did I post this at? I'll show you the exact candle. Was that 10:04? Yeah. So it was on the new hourly candle. I'm not bearish on NASDAQ, meaning like I'm still looking for upside. So my first entry, I was expecting these candles to be a fake out when it broke support. And then I entered, I think my first entry was somewhere here. It took me break even. And then I entered again somewhere up here. And I just closed it there. Like it's a scalp. When you look at this risk to reward, it looks like trash. But like where are you gonna get good risk to reward here? There isn't any. So I wanna be able to adapt to what's going on. That's why my first 1 or 2 trades I closed in drawdown because it didn't hit my full stop loss. I'm not gonna let it hit my full stop loss because I have a really good feeling that this was gonna happen. So the second trade would be this one right here. This one I posted at 10:22. So my first entry is right here. And then we have the second entry, which was on this one right here. I think when it started to break out. And those are the 2. You notice I keep taking buys because I'm bullish on NASDAQ and we have these meetings going on to end a war. So my bias is looking for upside, but I'm still not married to it. I don't know that I held this one the whole way up. Let's see if I told them when I closed it. Right here, I closed it at 23,810. Yeah, so I had closed somewhere down here. All of these trades, I entered with volume because I don't really have that much trust in what's gonna happen when you get candle closures. We've gotten so many candle closures and it's still not doing anything, right? Candle closures don't really matter when there's indecision in the markets. This is why technical analysis is very helpful for taking entries. But if you don't understand what's going on, like you don't have an idea that these people are speaking, it's like you're just gonna get destroyed not knowing what's happening. A couple of the tools that help me stay ahead of the markets, number 1 would be an economic calendar. I'll bring over Day Trading University's Discord again, and you can see economic calendar here, right? This is very, very important because it helps me know what am I paying attention to today, tomorrow, this week? What are the markets paying attention to? So an economic calendar, very important. I've also showed you the news feed before, which I'll show you again. In my opinion, extremely important. This in the economic calendar is 100% what's made me a profitable trader and made me stay consistent. And number 3, most important, you want to have the experience and knowledge to know which economic data and which headlines are actually important for the markets. Or you can just borrow that experience from somebody who has that knowledge, which is hopefully what I'm accomplishing by making these videos for you. Because these headlines, like when I first bought a news terminal and got access to headlines, every single headline feels like it's important. Everything seems like it's gonna move the markets. Every piece of economic data feels like it's the most important. But over time, you're gonna see patterns. Over time, you're gonna learn what the markets are paying attention to. And you can either take the time and learn that on your own, or hopefully pay attention to these videos, or come into Day Trading University and steal that experience from me, because I'm doing my best to share this with all of you. I hope this is helpful. I will see you guys in tomorrow's market recap.